Another example of choppy trading occurs in business objects, BOBJ. Even though it obeys some semblance of trend development, such as two waves of corrective activity between 11:30 and 12:30 Eastern on day 1, and on the correction off highs from the end of day 1 and into the beginning of day 2, this type of choppiness, whereby the prices on each of these 5-minute bars share many of the same values as in the previous bar, make it much more difficult to notice these characteristics in real time, yet alone narrow down ideal entry and exit locales. If I had attempted to buy out of 10 o'clock on day 2, for instance, relying on the increase of volume to act as a possible confirmation tool, I would have likely been stopped out when it made a somewhat lower low into 10:15 Eastern. It also makes it extremely difficult to accurately read a change of pace or momentum. For instance, the downside pace here appears to be slowing from 12:30 to 1300 Eastern on day 2. Volume's also declining at this time, which would often indicate a lack of highly motivated sellers. The stock even spikes shortly thereafter as it breaks free from the triangle. Nevertheless, it reverses just as quickly and is attempting to make its way back to the zone of the morning lows. This does not mean that the concept of pace is completely invalidated, of course. The stock did manage a more rapid spike initially, after all. It also displays a better, less choppy pattern as it forms a more narrow range out of 1400 Eastern on more gradual upside, and then makes that final drop into 1430 Eastern. Even within the choppier trading activity itself, a larger change of pace can be observed when comparing the overall momentum of the afternoon rally on day 1 to the late morning rally on day 2, when the stock attempted a continuation pattern coming out of the correction that had formed into the close on day 1 and the first 45 minutes of trading on day 2. The second move was much more gradual. This can be observed most clearly by transecting each of these moves. Even the volume had a very difficult time confirming the upside move on day 2. Granted, there were some sharp upside swings within this move itself, but they only lasted for one bar at a time, and they did not have the volume to accompany them to indicate that there was really strong or significant buying. Even at this high, there was no volume spike. This allowed for the reversal into the afternoon.